All right, so we go into a very important week with a relatively small range, small day today, very small volume, not surprising, but still an up day, especially coming out of the weekend where Chinese stocks dropped like a rock overnight, and there was overnight action where futures dropped down to their lows of the day. Some thought it might carry over in the U.S. Of course, that thought was nixed very early, even with some very poor housing data today. Sentiment stayed on the bullish side of things, at least in the S&P, not so much in the Russell. But this is a really important week, not necessarily for the S&P and the Nasdaq. They're strongly bullish already. It's going to be hard to kind of push them up to significant new highs, considering the strength of the bullish move of the last 5 days. But for the Russell, it's a really big deal. So we talk about that. I'm going to show you why with the technicals today. We're also going to take a look at there's other outlying moves within different asset classes and sectors. We're going to point those out, and then we'll talk about our trade idea of the day, a stock that itself is looking really good, but is kind of moving into a middle range between a really significant high it had, parabolic type high, and then coming off of a pretty quick low. So how can we trade it with these big swings up and down? So let's go ahead and get started. Today is Monday, July the 26th, 2021. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, well, let's start off taking a look at the S&P 500 with the Market Forecast Indicator. Look at this, 5 days in a row now. Another new all-time high today for the S&P 500, obviously not for, again, the Russell 2000, which we'll see here in just a second. Intermediate line back almost above 90th percentile, so it's back to really being strongly bullish. Obviously, we're well above 30-day moving average again, just like that. So that's how far, like, again, you can kind of see the difference between some of these moves to the upside in terms of how far we get, how fast we get. Let's go 30 here. And then simple, how fast we get to this level. So, we are to, I'm just going to throw a line on here and put it at 2.63. If you take a look at how fast we've gotten up to this point, you can see we got up to this from zero, right? To go from zero to this point, we did it obviously in 1, 2, 3, 4, 5 days. Over here, it took a lot longer than 5 days to get up 2.5% or 2.63%. Over here, it went really rapidly. In fact, we kind of went faster. Remember, this was actually an intermediate pullback on the NASDAQ 100 back then. On this particular case, we went up pretty quickly, up to 2.63 relatively quickly, or 2.5%. Over here, you notice we ran up really quickly in a matter of like 2 days, up above 2.5%. And you can kind of see some other examples over there. Over in August, going into the last pullback, the only pullback in the last, since pretty much more than, over a year, we were above 2.63% for about a month, over a month, by the time we fell down before peaking. And you can see over here in April we were above this level. So we are, we're relatively high, but we're not. We've been higher, specifically either going into parabolic peaks or coming off of what was an intermediate low, not necessarily here, but in the NASDAQ. Obviously, it's not the case for the Russell 2000. The Russell 2000 continues to be below, and you can see it's negative. It's actually, it tried to ramp up pretty quickly, but it's kind of stalled, getting back above 2%. It's still in bearish territory. Like, there's still like light green shading. We're still below the moving average. We are not in bearish territory anymore. We're back into the neutral zone. So it's going to be very important to see whether or not we're able to get through the bullish into the bullish zone. Right now, not a single line. Like your momentum line is at 60.31, but all of them are in the neutral zone right now. All 4 lines pretty much are in the neutral zone. So the Russell is really not, obviously not bearish right now, but also not bullish either until you can break back above 60 and you get more of these lines, and obviously getting back above the moving average, which still has a red line there. Of course, your NASDAQ composite is what's driving this action right now. Your Dow Jones Industrial Average following along for the ride. So strongly bullish posture on the S&P 500. Strong bullish posture in the S&P, strong move off the moving average in a short amount of time, much shorter than the last time. See, that move never did get to 2.63% before you got below the moving average. And then, of course, it took a lot longer here than it did right now. So big ramp up here. And you could say that we are coming off of an intermediate low in the case of the Russell 2000 being an intermediate low point. That, like I said, we got on the NASDAQ over here. And then the S&P had a good strong run to get off that low, and the Russell kind of doing its own thing here in this at current levels. All right, before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon here in the bottom right corner of your screen, hit the red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube. That notifies you when our videos are posted. Also, while you're down there, hit that thumbs up icon. That tells us two things. Number one, you liked our video today. Number two, you want us to do another video again tomorrow. It's a quick way to give us feedback if you like our videos. Of course, if you don't like our videos, you don't have to click on anything. You don't even have to watch. But if you do like our videos and you want to let us know, give us a click right there on the thumbs up. That's a big deal for us. We appreciate those who do that. It goes a long way. It helps our videos get more reach. So that's why we always ask for it. Also, comment down there. What did you get out of our videos today? What stood out to you? What questions or comments do you have? Post those in the comment section. Join our website at marketscholars.com. There's a link popping out right there in the top right corner of your screen. Click on that link to subscribe to our site for free. We actually have an offer for free subscribers to be able to check us out. So subscribe there to check out what that offer is. Follow me on Twitter for more content in between the videos from day to day. There's my handle here at DavidSettle42. And join our Market Outlook Facebook group that we've created. All right, if you're watching us here on our blog, check out some of these things over here on the right, including our Market Outlook live video and our trading rooms that are coming up. Again, all of our subscribers get access to that. And like I said, if you're a free subscriber, we'll give you an offer to check us out, to check out how our classes are, see if that fits what you're looking for. Our Market Outlook live trade review is a class, 15 minutes, generally 10 to 15 minutes. When I do the Market Outlooks, I do this video but at 3:30 Eastern time before the market closes. We look at all the previous Market Outlook trades that we've done in these videos to see whether we should stay in them, close them, what should we do with them. And then we put on today's trade idea that I do here at the end of the video. We've already put it on in that video. So all of our subscribers have already seen the trade idea before, and we're able to place it before tomorrow morning. So that's the place you can get that there. Come down here, click on this heart. It opens up a new tab. Click on this like button right there. Also hit this thumbs up icon, opens up another new tab. Hit that like button there as well. Again, the more you do that, it benefits us. It helps us get our content out to more people. The more likes, same thing with YouTube. So again, you can do it right now while you're watching. Also come down, it benefits you too, because Twitter and Facebook will promote content in your timelines from the accounts that you engage with the most. So we try to make it really easy for you to engage with us here. You'll also notice up here at the top, you can subscribe to our site for free right there at the very top. Just click on that blue button right there. All right, now let's take a look at, give me 1 second, come over, let's take a look at the weekly chart. So let's take a look here and look at that nice big bullish candle. So nice bullish candle, back to bullish. We had that transition. We're back to bullish there. Remember, not all transitions are the same. You have to kind of look to see whether the transition has a bearish candle or a bullish one, and this was obviously the opposite. So back to a really good strong bullish candle here on the Hakinyashi level. If you take a look at the Russell 2000, we're to a transition candle. So you can kind of see we might be close to being done on the weakness here on the Russell 2000. So very important inflection point. As you can see, we're below 7.5% on the PPO. That's now below where the S&P is. So after being above the S&P's PPO for quite some time, even all the way up to last week, this week now we are finally below it. So finally the Russell 2000 has lost the advantage in long-term momentum. In other words, the size of that gap between the 10 and 40 moving averages there, 10 and 40 week moving averages, exponential moving averages. That gap now is shrunk to a smaller gap than what you see on the S&P 500. And this is the first week. So it's crazy to think that, but again, it just goes to show how big that gap was when we were so bullish there. It created an insanely large gap, and what happens is that gap converges. Right? These lines converge. That's what always happens. If you take a look at the two-line versions, of the MACD and stochastics. You can see that here. The MACD is right now diverging, so the lines are moving up again. We diverge, we converge, we diverge, we converge. And now we're back to diverging again. And IWM is doing the opposite. It's converging in the other direction, right? Because we had diverge away from the moving from zero, the blue line moving away from zero. Now it's converging slowly above its moving average. You can see the moving average for the stochastics is close to getting outside of bullish territory itself from the lowest level that we've seen for the Russell 2000 since, again, that actual intermediate pullback that we had last September. Let's take a look at some of these other lines. Again, we're kind of watching for parabolic signs. So the QQQ, you can see that DMI is still very, very high up above 40. The negative indicator finally dropping below 20. That's helping the ADX start to rise up again. So not quite parabolic yet, but a very strong move on the positive. You can see the IWM, it's hard to get going on a positive move until we can get that positive sign to break back up above 25. And you can see that here too. In the Bollinger Bands, SPY is pushing up against the upper band and is actually outside of its Keltner channel. So this is kind of the bullish sweet spot. We're outside, we're pushing up against the band, we're in between the band and the upper Keltner channel, and the bands are outside the Keltner channel. So it's a very good positive sign. You can see the Qs are trying to get that way too. The Qs, you notice we've had green dots for quite some time. There's a length of time that you have green dots before it turns red. In other words, the bands get back inside of, and we came really close to that happening there, and it didn't. Just to kind of give you in a sense of how long we can go with green dots. You can see, here, the last time we were bullish, it was green, but then we went bearish before it turned red. So it's not too often that we can be. You can see the move over here where from early June to late July, so almost 2 months, we were pushing up again in this upward trend with some strong momentum early and then fading late. And we're in the fading mode right now. Strong momentum early, and we're back to light blue bars, so positive momentum again, but obviously not the strongest move. Same thing with the Qs. Like, I wouldn't expect a bigger peak than what we saw here. We're just kind of in fading mode, something like this, right, where you just start to fade down towards zero. IWM is the opposite. IWM, we're in fading mode with these bars moving up towards zero. So we are, the bands are outside the Keltner channels, and we are trading close to the midpoint of the bandwidth. And you can see, again, the very strong resistance, why we weren't unable to get to new highs like the S&P is, because this has extremely strong resistance above us that the S&P just doesn't have right now, and you can see even the moving average here in the middle of the bandwidth is also acting as a resistance level. The RSI and the CCI up at bullish levels for the S&P 500, in neutral territory for the Russell 2000. The NASDAQ 100 is very strongly, but in fact the RSI is diverging with a bearish divergence there, something to keep an eye on. If we run out of gas here on the NASDAQ, if that divergence plays out to a target of 14,500, which is where the low point is in between, and then obviously below that would be the trend change, if we get below that, of course. All right, now let's take a look at the intraday move. Look at that strong move, new high. So very, very bullish Arun indicator, as we've seen before. The negative line moved up, but just like we saw over here, the negative line moved up for it. It didn't get it to 100, which is what you need it to do, not only cross, but also get to 100 for us to have any semblance of bearishness. Even that didn't last on this time frame, but it tends to be more bearish, as you can see, when you are in actual intermediate pullback mode. It gets to 100 and stays there. Right, so until the positive one gets all the way over to 20, and that's a good sign that at that point your intermediate run is over, pullback is over with. But that's, we are right back to 100 on the intermediate on this positive sign. If you look at IWM, the positive indicator has gotten down to zero. So kind of a sign that, we might be getting closer to the end. Very, very important inflection point to see. We either bounce back down from these levels, the 17-day moving average for the for the Russell 2000. So we either bounce back down from here or break back up above that 17 and stay there. And if we break above the 17 and the 30 at the same time, like breaking down, then that's your sign. That's a decent sign that we might diverge again, or excuse me, in this case diverge to the upside and switch like we did right here with this bullish move back above the 17 and the 30 in the same day. Now stay bullish at that point. So that remains to be seen if that ends up being the case. Today's volume way low, so very, very important. Tesla after hours, of course, and all the earnings. So markets just not doing much of anything, and the Fed meeting too. 3 green arrows, extremely light volume. Not surprising the volume was as light as it is. Remember the ATR relative to the price has formed is coming off of extreme lows. We started to ramp up some volatility a little bit. The volume is picking up again, though today's move way low, extremely slow. And then today's trading range of 1.77 points, way below the extremes to the downside. So again, preparing for what's coming up this week with any kind of volatility that can come out of a major earnings week for equities. Finally, let's take a look at volatility, and you can see the VIX bounced up as it always does on Monday, right? It bounces up to some degree. In this case, it bounced up, stayed in the bullish territory, finished the day at the low of the day, and again, not surprising, it tends to do that more often than not, and then finished at extreme lows again. So, again, the volatility index is going into, again, this earnings season typically produces volatility. That's the nature. That is your seasonal trends for the S&P 500. So now that we have pretty much most of the FANG stocks all in the same week, this would be the week that starts the volatility, and we're heading into that scenario with volatility already extremely low. So it's kind of hard for volatility to get much lower. On one hand, on the other hand, it also shows the market's very complacent. The market care less about the earnings that's coming up in terms of buying protection or any kind of concerns about any downsides in the market. There's only upside risk right now to volatility and very, very little downside risk. All right, so before we look at some of these other asset classes and our trade idea, just to summarize the technical outlook, we 5-day streak to the upside, heading into a very important week, very low volume, very low volatility. The market is not concerned about downsides right now, except for the Russell 2000. So I don't think necessarily we'll get some answers this week in terms of the S&P and the NASDAQ. They're on strong trends already. It's hard to get too much stronger. And if it does get stronger, it gets parabolic, and that's a big concern, right? But I do think we can get some answers on the Russell this week. So whether or not we break back up and join the rest of the market on their bullish moves, or that we hold resistance and roll back down and continue this intermediate pullback that it actually is currently on, and extend it to an actual pullback, an actual exhale beyond 23%, which it hasn't been able to do the last few times. It's multiple touches at that Fibonacci level without breaking it significantly. So right now it appears that the more likely scenario is the Russell will break up and fall because of where the S&P and the NASDAQ are, barring any significant news out of the Fed this week, barring any significant issues coming out of the earnings announcement, especially if inflation rears its ugly head in a lot of these earnings reports, that kind of a thing. So I think that's kind of your lower likely scenario. I think the higher likelihood still, even though we're heading into volatility, is the trend shows we're still kind of grinding. We're still in grind mode. We're lacking a catalyst to produce any kind of exhale outside of a small niche in the market, as you'll see here in a second. And so until those floodgates break on the Russell, we follow the recent precedent is to have some weakness and continue higher, and have weakness in a different area of the market and continue higher until we see more of a broader weakness, which we just, on any of these down days, we just haven't seen. It's either been really weak in the Russell, or really weak in the Dow, or really weak in XLK, but never weak across the board, which would suggest broader weakness and exhale. And until we see something like that with a good kind of runaway type gap to the downside, then we expect that we'll just continue to ride this trend. So what do you think? Do you agree with that? Do you disagree? Let me know in the comment section below, especially if you disagree. What charts or indicators are telling you to be whether to be a lot more bullish than I am or to be a lot more bearish than I am. All right, now let's take a look at what's driving a lot of this price action. Let's take a look at today's selling, and you'll see right off the bat what really stood out, and that is, especially if you follow Brandon Van Z on Twitter, that is China stocks, right? China stocks just blew up right from the get-go from the market. Obviously, they blew up overnight, but right from the open here, they're really down significantly and then stayed down all day because, again, most of its price action occurs overnight. Whereas small cap stocks were the opposite. They started up big time. They were up over 1% today before pulling back and then, in fact, giving up all of its gains at one point in the afternoon at this point right there, and then finishing with about a third of its gains that it initially had. On the other hand, the dollar was down, long-term bonds was down by the end of the day, commodities was up, gold. So this was a risk on day. Let's see what some of these other charts look like, especially the euro US dollar, because that's been down, right, with the strength in the dollar to the point where we hit some support, and you notice we are bouncing right off that support again. So, but you know, it's more of a oversold technical bounce. As you notice, we are still easily below the 17-day moving average, just barely getting above the 8. We've been converging for a while. The MACD peaked, the MACD line itself peaked way over here in June 21st. So we've been in convergence mode. Like we had the selling, the MACD histogram peaked on the 18th, the day before June options expiration. The day after is when the MACD value line. So since then, even though we've been bearish, we've been converging because we've been this slowly bearish. So this kind of watch to see again. It's kind of susceptible to that bullish break where you get above the 17 and the 30 at the same time because they're so close to each other now. If we get that kind of break, then we have an opportunity for the euro to be bullish again, the dollar to be bearish, and that would be a risk on move, right? That would be very bullish in terms of risk appetite. So very important to watch that level. Here's the market forecast chart for it. Again, hitting at that support, a little bit of a morning star candlestick pattern there. But still, the intermediate posture is still strongly bearish, well below 30, and even the near-term line still hasn't gotten to the point where it would suggest that we're reversing that yet. So we need to get a much stronger bullish move on the near-term line before we consider that the trend has changed. Long-term bonds pulled back down today. As you can see, the intermediate line falling below its market sentiment line. So we'll see if the TLT is also in its pullback mode. It's been in risk aversion trade like the dollar, but might be a little too bullish and might be in risk appetite mode again briefly. So it kind of shows the market kind of setting up for potential risk appetite trade here over the next week or two as these things kind of settle down a little bit. There's gold. Look at commodities, and you can see back to dark green shading, a green line, and almost back above 60. Right, which would be back in the bullish territory. And the near-term line suggests that we will get back above 60 on the intermediate line. So very strong bounce back in commodities after a really significant breakdown that Monday after earnings. They are getting below multiple recent lows with the divergences setting up across some of these indicators over here. Let's take a look at all the major economies, and you'll see here the China, and see the big decline here in China. Look at that big time drop. Now you got a cluster, and you're just a smidgen below the 62% retracement level over here, but big drop. You can see that didn't follow through to other stocks. So I would be very wary about piling on here. Like it's very oversold, extremely oversold. Again, remember you have your biggest moves below the moving average, your biggest bullish moves, and you get the biggest bullish moves the further away you are from the moving average. So as you can see on some of these other charts here, all these other developed markets kind of getting to the moving average, India breaking through, but all the rest of them are kind of not yet. So light green shading looks great, not quite to where the S&P is, and we'll see if the China follows and follows very rapidly the same trend that we're seeing in all these others. That's if I if I would expect China to continue this decline, then I would expect Korea also to struggle too. They're quite tight at the hip there, and you didn't see. I mean, Korea obviously started the day down, but very bullish move to finish the day. So I expect this to be very temporary. And again, as we saw, like we had some really significant moves to the downside in France and UK, and look how fast they bounced back up in just a couple of days. So don't be surprised if China doesn't make a similar type move as we've seen all across the board here very recently in a lot of these other ETFs. All right, now let's take a look at the sector moves. So let's look at the sector comparison chart, and we'll just look at today alone. Remember, it's very China focused today, and small cap stocks started the day so strongly. Well, let's take a look at how that translated to different sectors. At the very beginning of the day, look at what the biggest winner was. Now, why was that such a big winner? Well, keep in mind that again, the biggest loser here lately has been energy to the downside, right? So, sorry, let's get to energy. So it's not surprising that energy is going to bounce up whenever we do get a little bit of a bounce, snapback rally, materials and financials to a lesser degree. So again, going back to just today alone, there we go, June 26th, and then 5-minute chart, you can see that they were the biggest winners initially, and discretionary jumping up to with XLC, XLK lagging the market, interestingly enough, down back there with these safe haven trades. Because remember, right now XLK is behaving very much like a safety trade, and then healthcare, which has been pretty bullish lately too, have been the biggest loser on the day. So again, your biggest winners today were these sectors that are more correlated with the Russell 2000, and yet the Russell 2000 wasn't able to break out itself to a bullish move. So an oversold bounce in a lot of these areas, was it enough to change the trend for the Russell? Today it wasn't. So the question is whether it will turn into something more tomorrow or the rest of this week. You can see getting up to the moving average, on financials and industrial. The energy is still well below the moving average, and then industrials is kind of flirting there. And then health and all these others that are so strong, technology and a little bit of a discretionary, and then healthcare kind of slowing down because they're so far up above that. When you get this, when you diverge so much, you start to converge. Doesn't mean you have to drop. It just means you start to slow down the significant divergence that you've had. So, for an example, here's XLK. There's the MACD has peaked, and now we are diverging. Especially like we are diverging. Converging on the MACD towards zero, but we're diverging with higher highs and obviously lower highs. So we are in convergence mode. We've had our peak on the MACD, and it doesn't mean we have to go down. We can still stay up for a while after peaking, but we've had our peak on XLK. You can see XLY. We've had our peak on the MACD, and we're starting to converge and potentially diverging with this higher high up here, and not so much an XLC, but same concept, right? The MACD peaking over here and seeing if we'll end up getting a lower high with it already significantly higher high on the index itself. When you look at like energy, it's the opposite, right? We've had our peak to the downside and we're converging. We've gotten above the 8-day moving average, but still easily below the 17-day. And you look at some of the others like financials, and we're just kind of just sitting around these moving averages in a convergence mode. And materials looking like it made that breakout of the 17 and the 30 in the same day. So very important to see if we follow through on that tomorrow and into the rest of this week to signify a good shift in sentiment for that particular sector. Again, that's correlated more to the Russell than it is to the S&P. All right, that takes us to our trade idea of the day, and I want to take a look at Home Depot. If you take a look, nice good bullish move. Again, one of the stocks had been well above the moving average, slowing down here. You can see we've had a very strong move on Home Depot previously before really breaking down in a couple of days and then turning bearish. So now we're kind of like, we got a good bullish move going on. MACD and stochastics are bullish and turning higher above the 8-day moving average, even with today's selling. You can see the long-term Hakinyashi candles are bullish. Good bullish candle here above a rising 50-day moving average. Not necessarily the strongest. Sure, it's already pretty high at 7.5%. You look at its directional movement index and you can see, okay, that's a bullish breakout move still, above 30, below 20. Not really, the negative line's kind of stalling and the positive line's already rolled over. The RSI and the CCI coming down from peaks, bullish peaks, but coming down from peaks. And then you can see from a Bollinger Band perspective, we are pushing up against the upper band, but we got this volume node here up above the value area, and we all know that these stronger volume nodes, especially when they're very, it's this kind of a single node like this, can act as a center of gravity for the stock. And we have a high established, we have a low established in the last couple of expiration cycles. So now the question is, can we stay in that range, especially with earnings coming up here? And of course, that leads me to, when you have a high established like that and low established like that, then leads me to looking at a iron condor spread, where we sell the 340, 355 and sell the 315 and 310 put spread, the 345, 350 call spread. You put those together, and that's the trade you get. And you notice we already did this pre-market, and you notice I didn't do a normal position size. I'm actually about 2/3 of normal on my position size, but I'm getting a good return for what is normal, for a normal risk. So my normal risk is about $1,000 a trade, especially for a higher probability trade like this. So I'm actually getting a decent return for what would be a normal risk for far less than normal risk, for 2/3 of it. And then of course the idea is, there's my break evens on the chart. As long as we stay centered around this volume node, around the center of gravity, then we're able to maintain. If we make a directional move to the upside, we have a little bit of a resistance there, not much, but I've got some risk to work with. And then if we make a move to the downside, I've got a very strong support and the value area that can work with us on the downside. So, if, with earnings coming up, if it doesn't make a directional move and just stays around that node, then that's how we make our money on this particular trade. All right, well, that wraps us up for today. You've heard from me now. Now I want to hear from you. Use that link that's popping out in the top right corner of your screen that takes you to our Market Outlook forums. All of our subscribers, even our free subscribers, have access to that forum. So post a thread there. Open up a new thread with any questions or comments you have about tonight's video. Reply to somebody else's thread. Let's keep this conversation going in between videos. As always, thank you very much for watching. Remember to subscribe to our YouTube channel, hit that thumbs up icon, comment on our video. Remember also like us on Twitter and Facebook too. Have a great rest of your Monday night, everybody, and we'll see you all next time.